Welcome to CEO Money. I'm Michael Yorba. Thanks for joining with us. I have Rayne Steinberg, CEO of Arca, on the show, ar.ca, the website. Rayne, welcome to the show.
Thanks for having me. Great to be talking with you today.
I'm glad you're here. Arca is taking the best of centralized finance to blockchain technology, and you're developing a new digital financial standard. Tell me about that.
Sure. So Arca is really bridging the gap between our centralized financial world of today and this decentralized world of tomorrow. There's quite a lot of ground to cover there, and it's a very complicated system, both societally and the actual systems involved. So moving the ball down the field takes patience, and we have that at Arca. So we're just trying to get the ball down the field a little bit in that endeavor.
Let's drill down into your vision for Arca.
Sure. Yes. So Arca, we aim to be a full-service financial firm for crypto-backed assets. So think of a BlackRock or a Wisdom Tree for crypto and blockchain. And that's where we address the asset class as both an investment. So that's investing in things like Bitcoin, Ether, and making products that safely allow the appropriate audiences to invest in those products, all the way to using blockchain technology to create new innovative financial products. So those are the two sides of the business.
There's still a lot of uncertainty surrounding crypto, blockchain, and it's very difficult for people who really aren't coders to fully get the grip on, one, the difference, and two, how it all works, and three, benefits them. Can you drill down on why it's so difficult for some people to understand this?
Sure. There's a couple of things. First of all, just societally, generally, we're in a very centralized world. So this idea of decentralization and what that means is just difficult to conceive generally. So we're used to handing over power and authority for financial decisions, information like social media, to centralized, trusted entities, Facebook, JP Morgan's, who we empower to make these decisions for us. What we're finding as the complexity of these systems grow, that there's actually risk that you're exposed to that you're not quite aware of, systemic and otherwise, and maybe those entities' goals aren't necessarily aligned with yours, and they're run by people, just like anything else with their own goals. So the idea of blockchain and crypto, just generally, is to allow systems, technological, to take away the need to give that trust to a third party. You keep the trust yourself, and crypto and otherwise, that trust is verified. So that's broadly speaking what's going on. The difficulty that people have understanding that complexity is really, we're used to having those third parties be those arbiters of trust. So if something goes wrong, like you lose your password or your keys in crypto, there's nobody to call. So there's a completely different societal footing that people have to get used to. There is no helpline at Bitcoin. If you lose your keys, that's it. So our goal at Arca is to say, yes, there's this wonderful benefit to decentralized future over here where you don't have to give away that trust, but you really have to bring people along in a very safe and easy way to understand that actually makes the benefits of decentralization real without exposing you to more of those risks of not being used to that ecosystem.
Now, I get that as far as your vision, but what about the mechanics? What are you doing to bridge the uncertainty gap? How are you solving this problem?
So on the investment side, we really view blockchain and crypto. So this is Bitcoin, Ether, like I was saying, as investment vehicles, is really inappropriate at the moment for retail investors. We have a suite of hedge funds, which are appropriate for qualified institutional buyers, high net worth individuals, an LP-GP structure, so hedge fund structure, where you sign LP documents with us. You are obviously a sophisticated investor, and you're making a small allocation of your general net worth to expose this in an investment sense. Then we layer on traditional Wall Street risk management, security and custody procedures that we think are best of breed to give the investor the best experience investing in this. Because what people don't understand in this space on the investment side is when you pick an investment manager, generally you're looking at what's their strategy, their track record, things like that. In this space, just as important are the operational considerations, security, custody, all the things that people are used to dealing with in a centralized system that are very safe and understood. You could have the best investment manager in the world in this space that doesn't have good security, and his entire portfolio could be hacked and stolen. So there's other considerations that people don't understand in that those are the type of questions you want to be asking your advisor who would be managing your crypto assets. So that's the one side of the house on investments where we're bringing best of breed there. And then on the other side, these are the blockchain products that we're creating. We're really looking to build these to the highest level of ethics, legal standards. So our first product is a U.S. Treasury-backed fund wrapped in blockchain. So that's a 1940 Act SEC structure, the same underlying fund structure as an ETF, with an independent fund board, a custodian for assets. So let's say Arca went bankrupt, nothing would happen to the underlying funds, and it would allow people to interact with the crypto system in a stable vehicle. So that's a US-backed treasury product, but wrapped in several blockchains. So think Ethereum, EOS, and Stellar. And this would give people who are coming in both in the ecosystem who are looking for stability and safety, it serves their needs, but then also somebody that like a wealth manager who wants to experiment with blockchain and crypto, but doesn't want to necessarily suffer the volatility or has a lack of confidence in the underlying counterparties. This is something as safe as any ETF that BlackRock or WisdomTree would put out. So if Arca went away, your funds would be safe in US Treasuries. Also, if this gets through, we just met with the SEC 2 weeks ago, this would give you clarity and comfort that you're not in a gray area or an uncertain area of the law, which prevents a lot of people from entering blockchain just because of the murky, legal and compliance environment.
Give me your vision of the future of traditional finance in crypto.
Sure. So I really see, our kind of motto at Arca is disrupt, not destroy, or disrupt without destroying. So we really see the movement of traditional finance to employing aspects of crypto and blockchain, but it has to happen in a very slow fashion. So we see fees and liquidity and things like that being driven down by blockchain technology, and also mitigation of like broader financial risk in systems through taking away some of these trust functions from entities that rely on people to make these decisions that might have priorities counter to either the system or their own. But that takes a very long time. And we envision working with the regulators, the SEC and people like that, and bringing them along. The problem is blockchain, fintech, crypto, these are now combinations of securities, wealth, and technology that we really haven't seen before. So before, where money was just a store of value or a transfer, now you can have money that does things, it executes things, it's self-fulfilling contracts, smart contracts. All of these things are new. Our regulatory bodies aren't even really set up to understand them properly. That doesn't mean there isn't a place for regulation, but you have to do it, slowly and bring them along with the structures that we have. That is not really where the crypto space is really set up for. They came out of a very anarchist, distrust of government, distrust of regulation. The people that are very entrenched in that space are set up for more of a destroy and disrupt. That's a very hard thing to do with people's wealth, savings, maybe multi-generational amounts of work are tied up in, funds. So you have to be it's a much more complicated and societally intricate problem than, let's say, disrupting things like the internet did.
I agree with it. Rayne, thanks for being a guest on today's show.
All right, thanks for having me.
My pleasure. You've been watching CEO Money with Michael Yorba. Like us on Facebook, follow us on Twitter, and subscribe to our YouTube channel.